All right, Derrick, how are you doing this morning?
I'm doing really well. Thanks for having me back.
Of course, man. We love having you on. We love our T3 Tuesdays here at Benzinga. So, like Dennis and I were just talking about, we've got a lot to talk about in this market. Earnings reports coming in. What have you been trading? What's been kind of top of mind for you?
Top of mind for me, even though we're getting into the harder earnings season here, which is where the micro comes into focus, I'm still very focused on the macro right now with how this market's been trading. I just feel like I'm looking at warning signals all over the place that are telling me I need to be very cautious on my long risk right now, but a market that just refuses to actually break down in any significant way. So it's been an environment for me that's been a lot more tactical in nature, where instead of having 20 plus long swings on like I have for a lot of this year, it's been still some long swings, but also some shorts that I've been trying to hold and trade around, and also doing just a lot more day trading in and out stuff for cash flow while I kind of wait to get through some of these bigger picture warning signals that I feel like are slapping me in the face. But
What are those warning signals?
the VIX, the dollar, interest rates, or even yesterday, just the poor breadth in the market, the QQQ daily candles that we saw pretty recently, starting with that ASML day on the 15th, and then again on the Taiwan Semiconductors Day on the 17th. Particularly that Taiwan Semiconductors Day should have been a day that caused the entire market to rip higher and the semiconductors to rip higher and fully negate what happened with ASML, but SMH couldn't do it. So there's just some concerns out there, but it seems like something keeps saving the market every day. Even yesterday at Lowe's, we looked very, very precarious. The Russell was getting smoked. The Qs looked really precarious at Lowe's yesterday. And then lo and behold, NVIDIA comes through and saves the market with that beautiful 140 breakout. But it seemed like NVIDIA was the entire market for a lot of yesterday. And then, Apple a little bit of strength and Amazon had a little bit of strength. But outside of that, it's been difficult for me to really find a place to hang my hat.
Talk about those shorts. You're saying you're pressing a few shorts here. What do you like from the short side?
So I've been short Tesla for this entire down move that it's had in October. Really started shorting it at the end of September into the up move, and it was getting pretty extended there. Then it had the poor car sales number in the beginning of October. Then it had that complete flop on the robo-taxi event. And even as someone who was short and was sticking short, I actually thought that Tesla should be able to bounce back a little bit better off of the big downside extension it had on that robo-taxi event. And there's just been no buyers on this thing. And instead of giving a bounce back into the gap, it just moved sideways for whatever it's been now, 9 trading sessions or so. And now the ADMA is caught up to kind of that bearish consolidation that it's created. And that thing looks really precarious to me right now. And I've also.
Do you hold earnings? Because earnings tomorrow night. Like, is this a stock that you're short Tesla, which sounds scary to hold into earnings? Thoughts going into the earnings report? Do you hold this short?
Sure. So I have rules for my trading, obviously, for everything I do that govern my approach. In order for me to hold something into earnings, I really want to have a very big profit cushion, because I do always feel that holding into earnings to some degree is a gamble. I have no idea what Tesla's going to report. And even if I knew what Tesla's going to report, I couldn't promise you what the reaction to that report would be.
GM today.
Right.
Let's beat and raise, and then we'll go down.
Exactly. So when it comes to Tesla, I have a large enough of a profit cushion that it will most likely be something I keep into the report, because the way that I view it is I'm up so much money in this thing on this short that if a good report comes out and this thing trades back to $140 or even $145, I'll actually still be positive in the trade. So I'll just give back open P&L, which is one thing. It'd be very different than me just saying, all right, I'm shorting 5 minutes before the earnings report, and then it rips up to $240, $245, and I'm just completely screwed. So if I give back some money because there's a positive reaction to the report, fine. But if the reaction to the report's not good, then I'll in a win-win situation where I can just make significantly more. I just think that the valuation of the stock is still ridiculous, and the justification for that valuation has always been the AI component to it, that it's more than just a car company. And I don't know how you can look at that robo-taxi event and really say that this is more than just a car company. Supposedly they had human beings actually controlling those cool robots that were like serving people beer and things like that. That's the rumor that's going around that I'm hearing, that it wasn't even like a fully autonomous robot that was just doing that on its own, and the robo-taxi event there's no date for when these things are even going to be ready. There was no like app that everyone was looking for having it be your personal Uber when you're not using the car. Like, it was just a disappointment across the board, and the stock is still super expensive, and the chart looks like garbage. So
yeah. I agree with you on the robotaxi event. It was definitely a disappointment. I've hedged a lot of my Tesla because I've been long Tesla for a long time. I've hedged a lot of it. The long-term story, I think, is still intact here. The short-term story, and what scares me the most isn't what you just mentioned here. What scares me the most is Elon Musk's political stance, where he's taken one side on everything. I've said the biggest risk, I believe, isn't valuation of the Tesla story, because I think Elon Musk, with what he's accomplished, obviously, over the years, I do believe Tesla is an AI company, but I think more of the risk is, what is he going to say next? The biggest risk to Tesla is more of what Elon Musk is going to say, because Tesla's always had a high valuation. I mean, it's always been viewed, as a special stock, where I was of the opinion for a long time as a car company, but they are coming out with a lot of cool stuff. And I do think some of this stuff is going to eventually materialize into cash flow. But short term, there's some hiccups here. Short term, that robotaxi event wasn't great. So I'm not going to argue with you on the short term here on this trade, to everything, all the points you just made. It's sitting here not bouncing back. It's waiting for the report. There's no doubt why it's not bouncing back. It's sitting here waiting for the report. That's why I was curious if you were going to hold it short into the report. So
yep. And then besides that, I've been leaning on a QQQ short with some size, which has been a little bit scary when you see Nvidia breaking through 140 the way that it has. But these Qs, they look, the uptrend is still fully intact with this market. When you look at the S&P and the Nasdaq, especially when you look at the S&P, the Nasdaq weakness, the fact that it hasn't made new highs when the S&P has, is a little bit interesting. But it goes back to just these recent technicals. I see you have the chart up there, going back to just pretty recently, October 15th with that ASML event, that big red Maribozu engulfing candle where it lost some support levels. That's something that I call like a day to take notice of. It's not necessarily the end of the world. It's not a trend break. We didn't lose any major pivot lows or anything like that. We didn't get below the 8 and 21 EMA or anything like that either. But it's something that I just consider to be like a day to take notice of. Like, why did we sell off that hard? Is this going to lead to something more? Is it going to lead to more potential breaks? In some ways, it's a slightly similar candle to the candles that we saw back on July 11th, which was pretty much a top there. It was, we were extended to the upside. We had this big fat red Maribozu engulfing candle come in. That led to a deeper correction. And then similar to the August 22nd candle, which was the same deal, we had some upside extension. Big fat red Maribozu engulfing candle came in. That led to a little bit of a deeper correction. And now with this one, very similar candle, higher volume on October 15th. And I actually feel that the market gave the Qs an opportunity to save itself with Taiwan Semiconductors. Yet that was a similar deal. We gapped up on October 17th on Taiwan Semiconductors and closed at lows, sold all the way back down. So the market didn't save itself. Then we had Netflix come out, a FANG stock that crushed it, had a fantastic move. Yet all the Qs themselves could muster up was an inside day. Yeah. And now I'm looking at this gap down this morning. If we really start to break yesterday's low, which is where we got saved yesterday by Nvidia, maybe to some degree Apple, if we start to break yesterday's low in these Qs, we could really begin to start to lose some deeper support levels, maybe lose the 21 EMA and get a little bit of a deeper pullback in this period of time in the end of October that I feel like is also an opportunity for that to happen, because you don't have the buybacks on right now in the same way that you usually do. Apple, Microsoft, they're in their blackout window and their buybacks, which has just become such a huge story for this market to move higher. So if we ever were going to break down into the second half of October, into the election is the time to do it. You combine that with some technical warning signals and an elevated VIX and a strong dollar and this interest rate situation, it just makes me want to lean short on some of these names.
Is that so? You got QQQ, Tesla, any other shorts you're leaning on?
I'm long the VIX, which
is like a short.
Is like a short as well, and I'm ready to pull the trigger on other things if I see the levels actually start to break. Like I'm definitely jumping the gun a little bit on not having as many longs on as I typically do, and trying to have some shorts on, because we haven't broken down. We haven't broken through any of those key support levels. But I think if SPX loses like 5,700 now at this point, then that becomes kind of a more of a systematic sell trigger also for some of the systematic funds that are out there. You know how markets work. They work in feedback cycles. Selling leads to more selling and buying leads to more buying. So if you can begin to break certain levels on the downside, that forces more sellers to potentially come in.
So
how much of this market just, and Aaron's going to ask you a question too, how much of this market, like the stabilization of the SPY, the stabilization of the Qs, how much is this just ETF effects, where it seems like when they sell something, the algos automatically buy something else? It's like, it's almost, and I play these effects, you know, where, you know, when you're having a bad day in one of the mega cap tech stocks, that they're going to buy a bunch of, you know, like Comcast and all these other, you know, rotation. It seems like whenever they're selling one sector, they just simply go and buy something else. And we rarely see these days anymore where everything's just getting whacked. Even to your point yesterday, where markets getting whacked, broad markets getting hit, well, then they go and they buy NVIDIA. It's like they can't just come in and sell everything. Why is that?
It's the dispersion trade that's related to all the vol selling that occurs in the market right now. You've got increasing amounts of volatility selling. You even have entire, like all these ETFs that have been created by a lot of the big banks to, you know, pitch them basically to retirees as, you know, income ETFs, where they're basically just indiscriminately selling volatility. That then creates a dampening effect on the S&P that creates the dispersion trade. So the S&P then struggles to break lower because there's tons of positive gamma related to the market makers and dealers who are coming in on the other side of the vol selling. So, you know, I think I saw a statistic this morning that even post OPEX, you know, OPEX is usually when a lot of the gamma rolls off in the market. We're still, I think, trading at like $5+ billion of positive gamma. So what that means is every time the S&P moves down 1%, there's forced $5 billion worth of buying. Every time it moves up 1%, there's forced $5 billion worth of selling. So it creates a very insulated S&P. So then what happens is, if you have, you know, NVIDIA trading up the way that it did yesterday, and the SPY is wanting to be able to stay flat because they're struggling to be able to break out of the, you know, forced cushioning on the downside and forced selling on the upside, then everything else has to sell to kind of make up for NVIDIA. So that's the dispersion trade. And that dispersion trade will continue to happen, where for every, you know, winner, there's a loser, so that the S&P can stay flattish until and unless it actually breaks, where you need so much forced selling to come into the market that it can kind of break through that cushion. And at a certain point on the downside, that's why I mentioned the SPX 5700 level. That's the level that comes from a Goldman Sachs model that starts to describe when some systematic selling begins to come in. And at a certain point, those gamma levels can flip also. And it's only at that point, when you can really force the market to break, that then correlations begin to increase again, and you see selling across the board. We did see pockets of that happen in July, August, and September this summer, where it was like, all right, the market's being insulated, the market's holding up, and then finally there was enough selling to come in on some of these days. I really remember that one day in July, I think it was like July 24th, where we finally were able to trigger, and then we saw the correlations increase and the selling coming across the board. So that's a big thing that I like to pay attention to with my own trading. I describe that very broadly as what I call market dynamics, which is, all right, are we in an environment where it's the dispersion trade, where for every winner there has to be a loser so that the S&P can kind of hold up and stay tight? Or where are the levels where we can break the dispersion and then actually see correlations increase? And right now, that's why I'm kind of watching that SPX 5700, because I think that that's a level where if we break it, that you can start to see that acceleration of selling and an increase of correlations, and even some of the better trades that have been out there begin to sell off as well.
I mean, we saw it one day this year, August the 5th, on the carry trade, when that all of a sudden everybody's like, oh my gosh, everybody's borrowing yen to invest in the US and everybody has to sell at the same time. And then it was a really ugly morning, but then they came back about the dip on that, you know, day anyway.
The most interesting thing in some ways on that day was actually where the VIX traded to, whatever it was, 65 or something like that.
Yeah.
The VIX actually traded to a level that I think was significantly higher than it should have been. It was a crazy day, obviously, and the market gapped down huge, and there was like 3 big sell days there if you include that morning as well. But I would argue that the VIX was up even significantly more than it should have been given that move. But that is also just related to the constant volatility selling that's going on in this market, where then everyone was getting blown out of that trade. It was all like a roll-off effect of the yen carry trade, causing the market to go down, causing the VIX to create that spike, causing those big squeezes in certain areas of the market. And then that also then turned out to be one of the best buying opportunities that we've seen in years, in my opinion.
Yeah.
Derrick, we've got this banner up on the screen for people to register to trade alongside you and your group of pro traders for free in your virtual trading floor, October 22nd, which is today through the 25th. So what can our viewers get if they hit this QR code and sign up for this?
Your viewers can get a fantastic opportunity to learn all the things that we were just talking about, how I come up with that information, how I look at technicals, how I position myself in the market. And it's not just me. I work with a team of really awesome traders who do this professionally for a living. And you get a look at a lot of different approaches to the market, not just the way that I do it, but the way that an entire team of professionals do it. We get a lot of awesome information in there, and we give it away to your listeners exclusively for free every time I come in and join for a few days.
Beautiful. All right, guys, we'll hit that QR code on the screen. We also have a link in the chat or in the description of the video if you want to go trade with Derrick. Derrick, we always love bringing you guys on from T3, and some great information coming from you today. Love the kind of contrarian viewpoints that you often deliver us here on Pre-Market Prep. So, Derrick, thank you again for joining us this morning, and enjoy the rest of your day.
Thanks, guys. Thanks for having me.